Good morning. Yeah, happy Friday. Everybody break out the jack. We've made it through another week. I know this. Wall Street can't wait for this week to be over. 800-951-0592 is our toll-free number. You know what we do. You also know you better get some, right? Talking about gold and silver. By the way, gold's up just a little bit. You know, I'm not talking about today because it's up today, but that doesn't matter. It's nice, right back up here. 6-year highs, 1446. Gold's up 20% in the last 12 months. Don't worry, doesn't mean anything. Right? It's fine. You got plenty of time. Do you? The website at allamericangold.com. You know what's out there. All kinds of stuff. 99% of the stuff out there we don't even talk about on the air. So every day you make it part of your daily routine. Do all that stuff. All our social media stuff's out there. The metals program. All that's anything you need. It's all out there at allamericangold.com. And what a last 3 days we've had. We had Jay Powell on Wednesday fumbling the ball, right? Let's call it what it is, right? Terrible, horrible press conference. Really, quite honestly, let's face it. The guy does need to be fired, right? Trump's right about that. Can't do it. Can't do it, no matter how big of an idiot he is, right? That was Wednesday. Cost the Dow 350 points. Then yesterday, we had the trade tariffs rise again. Remember, we flew over there when they ended it early. You should have known. 10% on the other, the remaining $300 billion. As I explained it in the last hour, this $300 billion is going to hurt a lot more. Because this $300 billion, the vast majority of it is finished goods. That means these come off the boat, get unloaded at the dock, put in the semi, sent to the warehouse, get ordered by the stores, put on the shelf, already finished. Or that the other stuff, the first $250 billion were components of part of something else, where so they could hey, you know what? That component's only 2%, 5%, 10% of the total cost of this item, so it wasn't as impactful. These tariffs, it's a full-on 10% increase. By the way, shoes, sneakers in particular, something like 70% of all the shoes made and sold in America come from China. So that's what cell phones, things of that nature, toys, all of those things. And listen, it's not going to end at 10. You should trust me by now. I've been telling you this the whole time. There's going to be no deal here. But the 10% kicked in. Gold is, like I said, right up here at 6-year highs, 1446, and it's just getting started. And a lot of people now, including myself, we're going to get a second rate cut. We actually may get a third rate cut before the end of the year, but we're going to get another one. And hey, if we don't get the third one this year, right, it's coming real quick in 2020. So, and just remember this. Donald Trump has been telling you to buy gold for what? The last year plus? Maybe the last year and a half? Right? What does he say? The Federal Reserve isn't doing the job. Right? I want to fire Jay Powell. Right? How many times has he said, I want a weaker dollar? Right? Over and over and over and over. And the one thing, whether you like him or not, and there's things about him I don't like, he's persistent about the things that he wants. And what he wants, right? He wants interest rates to zero. He wants the dollar to be weaker. Is it possible? I'm starting to come around. Maybe he does want to end the Federal Reserve. Either way, he's telling you to buy gold. It's just that simple. And when you start looking at it and really think about it, I mean, he can't say it. He can't tweet out, hey, everybody go buy gold, right? I mean, but maybe he can. I don't know. Maybe he will. But he really is. Effectively, what he's saying is what? I want the dollar to be worth less. Right? I don't want these countries to devalue their way out of it and all this and that. And we're starting into the next cycle. Everybody's easing. Everybody's easing, us included. And right at the time, right, we got the debt super cycle, the tsunami of debt upon us. So 800-951-0592. That is the toll-free number. Listen, don't doubt him. I don't bet against Trump. I bet, I don't always like what he does, but I don't bet against him. If I was you, I wouldn't either. I think gold is, still in its infancy. When you talk about the last great buying opportunities, right? 01 at 250, 2016 at 1,050, right? And I think we're getting ready for new all-time highs in this next leg. Patriot Radio News Hour. We'll talk jobs when we get back. So on Wednesday, after Jay Powell blows the press conference, the Dow's down 350. Yesterday was up, 300. Then the trade, the trade escalation comes up, right? Finishes down 280. Now the jobs number comes out today. The Dow's down another 250. Gold, right? Here we are, right? Getting 1447. New 6-year highs, right at new 6-year highs. And really looking to be gaining momentum. And just listen to what the president says. He'll tell you what to do. Payroll growth was in line. It just missed expectations. 164,000 jobs created in July. Now, I'm going to tell you that the whisper number was much higher than that because the government had done a lot of census hiring, and they thought that this number would be higher than what it was. So it actually, even though it was, the expectation 165, a lot of people were expecting 185, 190, even 200, 164. We are now on a path. When you compare 2019 to 2018, here's the slowdown here. 60,000 less jobs a month this year being created compared to last year. So last year at this time, the economy was adding 223,000 jobs. We're now at about 163,000 jobs. In the report, they went back to, by the way, so the 164, and then they took off 40,000 jobs from June and from May. June had the biggest one. Remember, June was over 200,000, got revised down to like 190. So that also had an effect on it as well. So it was even worse than that. Wages. This was the one that, and I don't want to get too excited about the jobs number. Yeah, we're clearly slowing. I mean, that's clear. Wages, they're like, hey, it was up 3.2% year over year. Yes, but not really. The average hourly wage now $27.96. But here's what happened that I didn't like. I don't know yet. It's early. Hours worked, which has been very, very steady. Right? It's been very steady. It slowed down towards the end of last year, and then it's been holding in at about 34 and a half, down to 34.3. So this is the second time hours worked has fallen in the last 3 jobs reports. So in other words, yeah, you may be making 4 or 5 cents more an hour, but you're working less, so you're actually not making any more money. So that was one of the things that stuck out in the jobs report. By the way, they did say if you tracked unemployment the way you did back in the 60s, it's the lowest unemployment rate, 3.7, lowest unemployment rate in 50 years. However, if you actually tracked it how you used to track it in the 60s, the 70s, the 80s, unemployment would be 7%, according to them. 7%, what they're calling the quote-unquote real unemployment rate, which when you say that, you're like, oh, okay, well, no wonder why wages aren't really going. It broke down professional, 31,000, healthcare, 30,000, social assistance, 20,000. I don't know if that's where Census Bureau workers would fall in. I don't know. Financial activities, 18,000. Manufacturing, 16,000. In manufacturing, by the way, the hours worked fell even bigger. So another thing that we'll keep an eye out for. But that was the jobs number today. So all of those combined has gold rallying and silver's up as well as we continue to really digest what's happening here. This isn't a trade war. I mean, it's nice to use that term, right? Trade war. This is about global dominance. Who's going to win? Right? We all of a sudden, we woke up and realized, wait a minute. China's competing against us. They're competing against us in Europe. They're competing against us in Asia. Matter of fact, they're competing against us here. Right? They've already said it, right? Their Belt and Road Initiative, it's in writing. They want to be the new superpower. That's what this thing's all about. That's why I keep telling you, there's not going to be a deal. China's not agreeing to any of that. Why would they? Right? Why would they? They're like, hey, listen, this isn't a game. We want to be number one. Why wouldn't they? Right? I mean, what did we expect? This is the part that really, it makes me so frustrated. All of these companies that sent their jobs over there, right? So their stock price could go up. But this is a communist nation. How many wars did we fight over communism, right? And yet here, no, they're our new best friends. China is the ultimate poker player. You guys like poker? I used to play, and I know some of you don't remember, but when Chris Moneymaker won the World Series of Poker, it was on TV here. This unknown guy, wasn't even a professional poker player, wins this event. We started playing poker at my house. I mean, we had a running poker game, I don't know, 3, 4, 5 years at my house. And we'd play every Tuesday night. And China is the ultimate slow player. They're patient. They're going to fold every hand until they've got a winner. Right? They're waiting for pocket aces. They're waiting for pocket kings. Right? They don't go all in unless they know we've already won. Right? And let's face it. Americans, we're more maverick. We got some machismo. Right? We think, hey, we can win anything. We do. And it's part of what makes us great, by the way. Even when we got a losing hand, we think we can still win. Right? And these companies, they didn't care. They wanted a stock price. They wanted to be able to pay themselves more money. They wanted to be able to hand themselves out huge bonuses. But really what was happening, this isn't a trade. This isn't about jobs coming back to America. And I know, Trump's going to give you a speech. Yeah, bring the jobs home. Now, they may move jobs out of China. They ain't coming back here. They'll go to Vietnam, right? They'll go to Malaysia, right? They'll go to Mexico. Let's not kid ourselves. I just told you $27.96. Trust me, the jobs aren't coming back here. They're not. And I'll bring up this point, and I did it in the first hour, and I'll do it again. When we went off the gold standard in 1971, everything goes back to that date. The debt was $400 billion. I mean, think about it. It's laughable, right? 400. That's it. $400 billion. It's nothing. Child's play. Right? I mean, let's face it. We had a deficit just this year in 1 month of like $280 billion. But in that speech, they already knew. Listen, it would be as long as America buys American, it's okay, and they were right. See, but what they didn't tell you was what was at stake if America doesn't buy American? What was going to be the punishment? Was it going to be the jobs? Sort of, but that wasn't the big punishment. Losing those jobs. Remember, they went on that whole campaign about how we didn't want those jobs, right? We don't want those jobs. Ask all these gig workers out there that now got to work 2 and 3 jobs if they'd rather work one job at GM. Right? Of course, remember, those were jobs that even had pensions and all that. That's gone. Heck, they don't even want to give you 401ks now. Now they only want to give you gig jobs. That really wasn't what he was talking about. He wasn't talking about the loss of jobs. He wasn't talking about, oh, well, you know what, if we do that, you got to be more educated, right? So get ready. If we don't buy American, you got to get more educated. That wasn't it. That wasn't the big thing. So what was he saying? What was he warning us about when he said everything's going to be okay as long as Americans buy American? He never said what was going to happen if we didn't. Today we know now. We have a rival, don't we? We have a rival that wants to be number one. That's what this trade war is about. It's not, listen, we were perfectly happy running $50, $60, $70 billion a month trade deficit. By the way, trade deficit came in today, $55 billion. It's not like it's getting better. It's like I told you, if they do leave China, they're not coming back here. But now China wants to be number one. Right? You got these guys like, I don't know why China needs to come to its senses. They just need to agree. No, China's like, it's not about Nike shoes. It's not about Apple iPhones. We want to be number one. Why do you think we're buying all this gold? Right? Don't you remember our Belt and Road Initiative? I mean, we published it to everybody. Right? Pretty much said right in there, by the way, we're going to be number one. I mean, this is really what it's all about. Trust me, it's not about goods. It's not. It's not a trade war about toys and shoes and steel and aluminum. It's not about iPhones. It's not about servers. It's not about computer chips. It's not about hacking. It's not about them spying. It's about what Richard Nixon warned us about in 1971 when he said, hey, as long as we buy American, it's okay. We stopped buying American, what, a couple years later? When's the last time we ran a trade surplus? I think it was 1973. Right, that was the last time. Right? Didn't take these bankers long. That's what it's about. I wonder. China's already started to slowly sell treasuries. Right, we know about the gold buying. They're going to respond. I wonder what it's going to be. Patriot Radio News Hour. We'll be back after the break.
This is the Phyllis Schlafly Report, presenting a daily conservative pro-family perspective since 1983 and continuing the legacy of Phyllis Schlafly. Now here's the president of Phyllis Schlafly Eagles, Ed Martin.
On Independence Day this year in Washington, D.C., President Trump delivered a stunning parade and celebration of our wonderful America. He also delivered an excellent speech in which for nearly an hour he honored and praised our armed forces and their singular impact on America and the world. It was a powerful tribute to the men and women who have secured our freedom for more than 240 years. Liberals spent months in a fury, squawking through the news media that Trump's display of military might would be dictatorial, or that his speech would end up being a taxpayer-funded campaign rally for 2020. Try as they might, liberals just can't succeed in hiding their true motives. As much as they hate President Trump and his ability to cut through the fake news stranglehold, it's clear they hate something else even more. Patriotism annoys the left more than anything else. What President Trump delivered on Independence Day 2019 was raw, unbridled American patriotism. He celebrated our incredible history, and he honored our amazing military. Not a single time did the president mention himself, his campaign, or his disgraceful anti-American Democratic opponents. Instead, he regaled the hundreds of thousands on the National Mall with a patriotic history lesson. Americans who tuned in on TV got a huge dose of that patriotism. From tales of General George Washington in the War for Independence to the World Wars and beyond, speechgoers heard an amazing history of our great nation. Big government handouts and globalism may send a tingle up the left's leg, but American exceptionalism is a guaranteed way to send a chill down their spine. Knowing that our nation is unique and special, and even better, is a belief that Marxist, globalist leftists cannot stand. They can't afford for the American people to believe it either. President Trump put our exceptionalism on full display on Independence Day, and he began what should be a tradition for all presidents. More than anything else, this exceptional patriotism sends the left into a frenzy. It's the message Americans need to hear most, and President Trump delivered.
This has been the Phyllis Schlafly Report from Phyllis Schlafly Eagles. Whether it's the vision of our founding fathers, the courage of our veterans, the moral compass of Christopher Columbus, or the fortitude of presidents like Lincoln and Reagan, the truth of history should not be undercut by liberal ideology. At Phyllis Schlafly Eagles, we honor history even as we look to the future. Join us at phyllisschlafly.com. That's phyllisschlafly.com.
800-951-0592. I got a great item again today. Excited because it's happened again. This will be the second time in, I don't know, a month, maybe a month and a half. And really the first time it happened in the 16 years I was doing this was about a month and a half ago. $5 liberties. So, you got the $20 gold piece, right? The 1 ounce, the $10, the half ounce, the $5, the quarter ounce. I don't know what's going on with tens. They have disappeared, right? They're the most expensive thing, which is so weird. But I got an email this morning, and a bunch of them, too. I got 220 $5 Liberties this morning. Here's why it's so exciting. A 20, and I got 20s really priced well. Right? A $20 Liberty, a $20 Saint is $1,530. Spot gold's $1,446. It's only $84 over spot. I mean, that's a good price. Any year, but like the last year or so, that would be like a super, super hot sale price, $84 over. I've got $5 Liberties at $380. Okay, $380. If you bought 4 of them, that would equal the 20. It'd be $1,520. So you're going to be able to buy 4 $5 Liberties for $10 less than the 20, and I'm shaking my head because you're going to be paying $74. 74, 73, right? 1446, 1447 gold. You're going to only be paying, less than $75 over spot for fractional gold. And we all know, right? 10-ounce gold eagles, they're super expensive. $2.50 Indians and libs, outrageously expensive, right? The fractionals are always more, right? The 10s and the 20s, they can run together. And even now, for whatever reason, the 10s are expensive right now. But, the 10s and the 20s kind of run together. The 5s are never this competitive, right? Normally on $5 gold in a normal, what like I said, normal gold markets for the first 15 years I worked here, right? It would cost you an extra $75 to $100 on top of. Right? If I came out here today and said $5 Liberties are $400, that'd be a really good price. I mean, regular price is $410. Right? Regular price would be $410. I got these great price, taking them all the way down to $380. Normally, I would tell you, hey, $1,600 for 4. $1,600 to $1,620, that's reasonable. That's fair. So to get them all the way down here at $380 is just a fantastic deal. Fractional gold. We always say, right, we want you to buy as much gold as close to spot as possible, right? And stay as private as possible. Right? That's really always the goal. And we always say to do that, right, you got to buy the bigger piece. You got to buy the 1 ounce, right? They're the cheapest. But we always worry, hey, we don't know what's going to happen, right? Wouldn't it be nice, to have that fractional gold in case there was like a Puerto Rico, right? If you guys didn't catch the show, I think it was Glenn Tate on the forum a couple of Tuesdays ago. A friend of ours, a friend of Patriot, owns a restaurant in Puerto Rico. He was without power for 65 days. It was a great, great show. And one of the things is, in an event like that, having some fractional gold really is, the ultimate. So today you get to do both. Hey, it's cheaper. Right, I'm going to be closer to spot, and I'm going to get the fractional. So a lot of you out there, because I know a lot of you are like, I'm not preparing for that. It's going to, I live in Phoenix, right? We don't get the hurricanes and the earthquakes and the this and that and whatnot, and it'll be okay. I get it. Today, though, you can buy fractional and actually save money. 800-951-0592. So the jobs number came in. It wasn't horrible. It wasn't great. The revisions didn't help. 164,000. We're now employing 60,000 less people a month this year compared to last year. And the other part, yes, wages have gone up, but what they're not telling you, though, is you're working a little less. Hopefully it stays. I hope that trend stops. We'll have to keep an eye on it. We did have trade deficit numbers out. $55.2 billion was the trade deficit in the month of June. We also had factory orders. And factory orders was a mixed bag. Yeah, they did rise, but only because they went back to the month before and really whacked it. So they said factory orders rose 0.6% in June. The problem was, though, is they went back to May. And May, they said, originally was a 0.7% drop. They lowered it to 1.3%. So essentially we had zero growth in factory orders. The problem was, even with the revision and making the headline number look better, they were still looking for a headline number of up 0.8. So we missed it pretty big there. And then a lot of the data inside of it, inventories, new orders, all that stuff, just kind of reasserting what we already knew, right? Hey, things are slower. Things are slower. Now the trade war, right? Now this next 10%, my guess is this guarantees us another rate cut. It actually may guarantee us 2 more rate cuts. The biggest thing that I think we need to keep our eye on, what is China's response going to be? What is the response going to be? Because, right, they tariffing us, we don't sell them that much stuff, right? That's already done. The only ways that I think they can really hurt us, right? They've stopped buying houses here, right? They've stopped buying stuff here. My guess is the anti-American sentiment in China is going to pick up, so they'll stop buying Apple products and Ford and General Motors. I'm more worried about the debt. Are they going to pick up the pace on selling treasuries? Patriot Radio News Hour, $5 libs. Listen, they're $3.80. Get them. Well, they're hot, hot, hot. We'll be back right after the break. 800-951-0592. Don't forget, coming up next on 1360, Bill Roberts going to be live in studio. Man, I can't wait. He is just incredible. He's going to educate us all on what's going on with the nation's food supply, so tune in for that one. As you just joined us, the Dow's down 200 more points. It was down 280 yesterday, down 355 the day before that. Gold's now up 20% over the last 12 months, but don't worry, doesn't mean anything. The president keeps telling everybody to buy gold, right? Think about as he's talking about the Fed that wants rates back at zero, wants the dollar to be lower, and I got no reason to doubt him, especially now. Obviously, I think he's got a plan. I think they get it. And as much as it hurts, we have to support this. I don't know what else we can do. Because it's really, like I said, it's not about goods. We were more than happy to let the Chinese build all the crap for us. We were. Build our crock pots, build our blenders, build our shoes, build our phones, build all the computer chips, build all the servers, build it all. Because we don't want those jobs. But the second they decided, you know what? We want to sell all this stuff to everybody else, right? We're using our corporations, right? We're not going to use Apple. We're not going to use Cisco Systems, right? We're definitely not going to use Verizon or AT&T or Sprint. And we were like, whoa, what? Wait a minute. That's not the deal, right? You can steal our stuff. We didn't care. Go ahead, right? But no. You can't go to the rest of the world and start selling the stuff you stole from us and undercut our company's prices, right? Now, that's a national security issue now. What did we think they were going to do? Right? And so now this is really what it's about. So when we sit there, we think about, hey, 10% on September 1st. Where do you think it's going? Right? You still want to believe the guys on TV that, it's not going to work. It's going to be 25. Right? The interest rates are going back to zero. I actually, and people can debate, and I could be wrong on this, but we've already done zero. We've already done it. You know this. So logic tells me what? Next time, we're going to go below that. Right? Remember what you know what's so funny? You don't hear it on our stock channels. Shh. If they don't listen to the fat guy, the crazy fat guy on 1360 and 1010, they won't know. UBS, Credit Suisse, all these other banks in Europe. What did they announce this week? Do you remember? Oh, yeah, that's right. We're going to start charging you for your bank deposits. Right? Don't worry. Hey, don't worry. It's fine, because everybody knows that's just normal economics, right? I mean, come on, right? That's what we learned in our textbooks. They did. They went to Harvard and Yale and Stanford and everywhere else, MIT, and they said, oh, yeah, normal economics is banks charge you to put money in. No. Right? Remember, the deal was, hey, I'm going to sign my money over to you. You don't even own it anymore. The agreement was, I'll become an unsecured creditor to you. In other words, I'm going to allow you to loan out you're going to make money loaning out my money. And, of course, by doing that, it's no longer my money, but you're going to pay me the vig. Right? They were like glorified mobsters. They were Tony Soprano. Hey, yo. Right? You're going to give me the money. Don't worry, I'll give you a little piece. I'll give you 5%, 6%, 7%. Now, because, these guys really know what they're doing, right? Because they're such great bankers, it's time to get rid of the Fed. Have you figured it out yet? You haven't figured it out yet? Right? Now it's, hey, you're going to give me the money, and I'm going to take a piece of it. And it's still not yours. 800-951-0592. U.S. $5 Liberties. It's the best deal in town. $380. And I just, it's fascinating. Because really everybody's sitting there, and I get it, right? We love what Trump's doing. I love it. You love it. We all love it. Right? He's telling you what to do. Right? And unfortunately, most people out there think he's telling you to buy stocks. That's not what he's saying. Have you heard him say buy stocks? No. Does he love Wall Street? Yes. He does. He loves it. He knows, hey, in order to keep these idiots fooled, I got to get the stock price up. I can't get the stock price up with the dollar high and interest rates, right? I can't do it. Right? Negative rates. They're coming. We know the quantitative easing, right? We already know. So right now, right, we're going to sell those mortgages, and everything's going to be, we're going to hold $3.8, $3.94 trillion of treasuries. What happens when we run out of mortgage-backed securities for the Fed to sell? Then what? Can't buy more treasuries after that. Who's going to buy it all? I'm worried that the Chinese are going to retaliate by saying, we've already been buying less. That less just got a lot less, right? That's what I'm worried about, right? Hey, it just got a lot less. I can guarantee you this. The Chinese yuan is going to get a lot cheaper. And you're going to see the president wage holy war on the Fed because that's a logical response. Right? That's a logical response the Chinese would do. We're going to weaken our currency, and we're going to weaken it and continue to weaken it. We're going to buy less debt. We're going to keep buying gold. And the president wants our central bank to match it, and he's not wrong. That's why you need to call the number. Patriot Radio News Hour, final segment coming in. final segment. Bill Roberts just walked into the studios. Make sure you tune into 1360 and listen to it live on the stream. The show, the Open Forum show, it's podcasted, so if you can't flip over there, you are not going to want to miss it. He sat down in between the break, and he's done this now. This is the second time he's come live in studio, so this is the second time we're going to have him on the air, and he just keeps blowing my mind, and he just did it again. I mean, it's blown now. The show's over. I'm just telling you, make sure you're tuning in. It's going to be a great one. Quick look here at the market. So we got gold up $26, $14.47. Kitco's got it up like $2. Same thing. A lot of that move happened in the electronic trading. After, because that's how they like to do. They don't make any big announcements until after gold closes. So that's the discrepancy. Like you go out to our website, hey, Joe, gold's not up $26. It's up $2. Yeah, same price, though. $14.47. Silver is up 10 cents, $16.28. The Dow is down 225. The S&P is down 28. The Nasdaq's down 128. The Dow... I guess 27,000's gone. 26,370. S&P 500. Remember S&P 3,000. 29.25 and falling. Nasdaq 8,000. 79.82. As again, we just had a culmination of a horrible, horrible performance by Jay Powell on Wednesday. Obviously, the trade tariff numbers, the escalation of the trade tariffs yesterday, followed by a less than stellar jobs number today, all kind of creating that perfect storm as gold continues to surge here and the Dow now scrambling kind of at least for these 3 days. Bad news was actually bad news for the Dow. I'm sure, though, hey, after the weekend, all those guys are going to go out drinking all weekend long. They'll come back Monday, and they'll have created some new reason as to why bad news will be good. It'll be okay. Nobody worry. 800-951-0592. Before you switch over to the margaritas, make sure you call. Get yourself some $5 gold pieces. Trust me, I know this for a fact. Buying $5 Liberties makes margaritas and beer taste better at the end of the day. It just does. 800-951-0592. Make sure 1360khnc.com. Bill Roberts going to give us probably an education we don't want to know. If you're looking to have your mind blown and have a whole new perspective, especially when it comes to food, tune in because it's just great. He really does a great job. He's super, super smart. It's funny. We shouldn't be friends because he's super smart. I'm not. But he's able to dumb it down for all of us regular folk. I mean, every once in a while he uses a word. He's like Alan Greenspan, and he'll use words I don't know what they mean, but then he'll come back and explain it to regular folk like you and I. So Bill Roberts coming up next. Hurry, call, get your $5 libs, listen to Bill, hit the margaritas, hit the beer, get the jack going, enjoy the weekend. Everybody take care.